Everybody, good morning. Gaten, Dan, Swinburne, Jan, Gregory, welcome. This is probably going to be a light attendance day, but welcome to the stream nonetheless, because today is Labor Day in the United States. We have the regular equity markets closed. That means New York Stock Exchange, NASDAQ, American Stock Exchange, the CBOE, all of them closed today. But I guess the Commodities and Futures Trading Exchange is probably open. I think they have an early close, and then they have a restart at their normal 6 p.m. I think it's a 1 p.m. close today, if I'm not mistaken. Let's see. Flip this over. We have... Yeah, we've been chooching along here. As you can see, that's today. 9:06. Just been kind of hovering in there. I guess maybe, well, it's 10 minutes lag. Yeah, 10 minutes delay. So, ES has been ticking along. Oh, we opened up way over here. Let's see. Jump up to a 5-minute chart. We opened up Friday. And right there, Sunday, 6 p.m. Well, a little sideways. Just sideways, really. Made a little dip and sideways. So if you didn't know that the U.S. futures were open, they're surprise. And so we've got oil open. One exclamation point right here. If you didn't know, now look, candles are ticking. So even though the equities market not going to open today at 9:30, it is like 9:17 right now, Eastern time. Hey, Kimberly, my favorite subscriber's here. Everett, good to see you as always, sir. We were talking about you yesterday at a Eagle Scout ceremony. I was at... We were standing there talking. All good things, of course. And Scott, welcome. So anyway, I know it'll be a light attendance day, but YouTube likes it when I don't skip a day. So we're definitely going to hit some crypto, go through it. Blair, good to have you. Good morning. If you got questions, if you want to be a chatter on the stream and talk to me, click the button way over here. Well, let me flip this back over here. Click the button down here in the corner. Be a subscriber on the channel. A few seconds later, you can chat. That's the only requirement. You just be a subscriber on the channel. And if you want to support me more deeply, I do have channel memberships enabled now. And I've been posting some videos and content there. I'm not going to spill the beans what it is. It's behind the scenes stuff. And, hey, more content for more supporters. Anyway, I went through last week what it was that I was allowed to and not allowed to put on there. Well, yeah, not allowed to, I guess. So anyway, thanks for all the hearts. Wrongover. Yeah, I was talking to Wrongover. And let's see. So total market cap. I'm down in the weeds right now. Look at the 5-minute stuff. Look at this. This looks pretty not great. If you've been here at all, if you're brand new here, let me know in the chat, I guess. But if you've been with me at all, look at this not awesome chart here. This is the total market cap of crypto. So we'll go through that here in just a minute. But that's the roadmap line right here. We were up there yesterday, or last week, excuse me, last week, and took a little spill, and not great looking. This is not great. This was a 3-wave move up. 3-wave moves up are corrections. Continuation is down because the trend has been down. All right, this is an undeniable downtrend into this low right here. 3-wave retrace up into the roadmap line that can easily result in continuation. It's just the roadmap line bounce upside down. If you're new here and have no idea what I'm even talking about, there's 2 main patterns. This being that I follow, 2 main price patterns that I look for in the markets all the time. This is one of them. It works upside down, right side up. We have a trend going. We retrace to the roadmap line right there, this orange line. If you're like, well, what the heck is the orange line? Link is in the description, or you can click my channel homepage, my logo down here underneath the video. Go to the main page, and a few seconds later, it will pop up a video that's like my favorite indicator, and with some arrows to this big orange line, and you can watch that video, get the code if you don't feel like buying it for $5. But anyway, so price tends to move up, come back, retest it, and then go in extension. Except this time, a lower high, busted through, lower high again, busted through. So this is a new trend. Retrace 2. Now, if we get below this zone right in here, the high probability target becomes this right here. And this is just the total market cap of crypto. I mean, it's not even like a specific crypto. It's just all the cryptos combined together. This can return right back down here. Right back down here. Like that. Pretty wild, huh? Like this metric, how it works. And, so you're like, well, all crypto, what does that even mean? Let's go over here. Check it out. This is a little different show because a little different stuff going on. I guess we got to accept the cookies. I like the cookies, but these aren't cookies I can eat, I guess. So this is coin market cap, and it's cutting the screen off just a little bit, but there are, let's see if I go, yeah, it's not gonna help much. So up here it says cryptos, and it says 2.4 million, and it says exchanges 802. So if you're like, well, what exchange can I go to trade all the cryptos? Literally none. Quite literally none. If we go look at this right here, you got 2.4 million cryptos, right? Click on that exchanges. Look, the top one on here only supports 418 coins. Right? Crypto is a difficult thing to trade because, like, 253 coins, 306 coins, 656 coins. That's a little bit more, but you got 209 coins. This one down here, Gate.io, 2,279 coins. What's the big difference here? The big difference, you got 2.4 million cryptos, and none of these are even close to 1 million cryptos that are supported. Not even close. Like, these are, most of these are just a handful, a couple hundred. So if you're interested in trading crypto, this is one of those things that you've got to be interested and invested. This is not one of those things that you're going to be able to passively, just kind of casually dabble in. All right. And because, 2.4 million cryptos, upwards of 800 exchanges. And as you can see, there's no one place to go trade. If you're going to do this any kind of a, active way, you're going to have multiple accounts at multiple places to be able to participate. So I generally have, I think, 5 different crypto accounts. Now, you can stay to the big boys, and we go, big boys and big girls, however you want to refer to it. When we look at this, Bitcoin dominance right up here in the top, and it's not going to blow up the numbers, so I can't do that. Awesome. Love it. So Bitcoin dominance right up here. We see that 56% of the entire market, 56.2% is Bitcoin. Another 14.8% is Ethereum. So what does that even mean? It means these two right here, the top two, these two coins right here, out of all those 2.4 million cryptos, those two represent 70% of the entire market cap. So when we're looking at the number right here, total market cap of crypto, 70% of this number, $2 trillion, 70% is Bitcoin and Ethereum. 56% is Bitcoin. All right, this is how long could this correction last? This could be done in a day. Like, we could dip down here, be finished up. Now, the other potential pattern here is the fact we moved up. Even though it's a 3-wave, a little bit marginal, we hold this zone here. This can lead to a breakout right here. Lead to a breakout. So that's the other, if we hold this, turn back higher, break above this high, right here, break above this resistance, that is the downtrend line, break above this high. So it's like 3 layers of confirmation here really quickly. Got to break this high, this line, and this high right there. So basically, if we break through this zone after holding this level right here, we're probably going up in a big way. Probably going up in a big way. This low right here, this high right here, this low right, well, let's say it pushes it a little lower. We could be looking at all-time highs very easily right there. Oh, thanks, Joseph. Thank you, William. Thank you. PN channel members. So we've got this right there, that potential to get through all that stuff. Now that it could turn down there also. Like that could be a correction. It could be a fake out. This is why we need to break that high and stay up there. If we just spike up and reverse, this can lead to another big down here. So this is, you need this. That's why you got to break the entirety of this resistance zone here. You got to really get through it. Got to do it with gusto, as they say. Mucho gusto. Got to do it with some enthusiasm to get up here. And we could have some much higher targets. Now, you're like, well, how does that relate to the price of Bitcoin and crypto, right? As I said, it's 56% of the market. So the chart is actually very similar because almost 60% of that chart is this guy right here, Bitcoin. Now, we have a very similar pattern. While not the same, we did poke above. We did it. There's a little caveat here. Now, Bitcoin actually. Let me delete this really quickly because I accidentally clicked extra. This, when we actually look down a time frame, pull this back on here, we actually did a small little. We had a little correction in there. So this is, while this is a big move down, and we kind of have 3 big moves. We have this little guy in here. So this actually could be 5 waves. Now, the problem with this one, instead of everything being all hunky-dory, awesome, this and this overlap. Not the ideal situation. Not the ideal situation. So that calls it into question whether that can actually be 5 up or it's just a big 3 up. So getting in the weeds here a little bit, but there's no earnings, there's no news, there's no, there's news, but there's no real stuff. They're not selling anything. They're not generating anything. This is all just human sentiment right here. So I have to use a sentimental analysis like Elliott Wave. Elliott Wave just happens to work on pretty much any price chart because it's all sentiment. All right. And as I've commonly said, do we pay attention to news because it's the sentiment driving that news that gets picked up and thrown out there? Or is it the news that drives the sentiment? A lot of people think we humans were trained at a very young age to think that everything happens for a reason. The news is the reason. What if our collective sentiment is the reason that the news gets picked and the headlines get picked? It really starts bending your mind when you really start thinking about it. That maybe the stock market's all just driven by sentiment. These charts right here. So, breaking on down with this potential right here, we're holding in this vicinity. Same market roadmap, same measured bounce, get the right word. Same measured bounce potential that I was just talking about. We've got the same high to break, the same downtrend to break, and the same high to break here. So we have a very similar resistance zone on Bitcoin right here. This is very technical analysis. I'm not about looky-feely, hopey, all that stuff. I'm very technically inclined on all my charts. Just happen to get lucky a lot. So this is the potential here. If we hold this zone right in here. Now, if we don't hold this zone right here, there's your price, 46.9. That's the next target. The one below that, 44.9, right there. So this, you say like, well, where can I put an alert? And no, right there. Like that's when you need to watch. If we get down to that 618, 55.4, 55,400, if we start breaking below that, these prices come into play. 39. I've commonly said that Bitcoin could retrace to 38 after this whole big move up we did over here into the highs before the halving back in March. Thought we could retrace to 38 at 39, kind of coming into play. So this is a very important level right now. This could finish it up. Like this could be done right there. Now, if we bounce here, we hold this, could lead to the next leg up, and we get up here to 80,000 pretty quickly. Possibly even as high as 90,000 before we do the next retrace. So it's a very important correction right now that we're in. This may be the last one we see before the big breakout run. I believe we're going to have a breakout run for past cycles. It's always proved we're doing a big breakout run. There's some people are like, oh, it's broken now. We're not going to do it. All right. Let's talk about something in a second. I just moved my alert. That's awesome. Put that back at 55.4. Right there. Now, we had something called the halving event. If you're new here, you have no idea what I'm talking about, halving event. That halving event occurred April 19th, right there. You're just like, well, what the heck does that even mean? Right here, Bitcoin, mempool.space, Bitcoin gets mined out. We have what they call a reward. The way miners get paid is with a reward for mining. Now, that reward gets cut in half every 210,000 blocks. All right, it's blockchain. You've heard blockchain. It's blocks of transactions. That's what is happening here. These are transactions. These are blocks. They're getting authenticated. The blocks over here have been authenticated. The blocks over here are waiting to get authenticated. Blocks of transactions right there. You can see there's like 6,000 transactions, 7,000 transactions, 7,000, 7,000, 7,000. There's a few waiting to get. And then there's 180 out here. Now, how do you get your transaction included in the current block? You pay for it. If you're not willing to pay, your transaction is probably not going to get included. So over here, these people aren't willing to really pay, so they're just going to wait indefinitely while people who are willing to pay get bumped up in front of them. Right? That's why Bitcoin's unique. You know, it's just like when you take your credit card and you spend it at the store, you don't see the fee that gets charged, but the retailer pays a percentage of your transaction to the credit card processor, and that's how they get paid. Bitcoin takes out third-party processors and the transaction authenticator, which, you know, like credit cards, that's Visa or MasterCard or Capital One or Discover. You know, you've got the transaction authenticator, which is just the miner. So you pay the miner directly to put your transaction in here. It doesn't come out of your transaction. It comes out of an extra fee that you add on. See, and you can select that, like, and tell, like, I'm willing to pay X Satoshis, which are pieces of Bitcoin, to get this processed. So over here, we can look at a completed block that was authenticated. And we see that the total fees collected right there were only 0.025 Bitcoins of total fees. So the subsidy for for the block was 3.125, and you add in the 0.25 transaction fee, and you get 3.15 was the reward for authenticating that block of transactions. That's how blockchain works for Bitcoin. Not all cryptos work the same way. If you want to get super nerdy about it, now if you want to watch this, mempool.space, mempool.space, you can go look at this. This goes 24/7, and it's going to be a while before we get to the next halving. Right there, April 17th, 2028, roughly. The last one we had was like April 19th, 2024. It's occurred roughly every 4 years because the difficulty gets adjusted every 2 weeks to try to keep it on pace for 210,000 blocks to take about 4 years. So every 14 days, they adjust the difficulty of mining to keep it on pace. So this is, if you took a bunch of money and went and bought a bunch more miners and you were trying to corner the Bitcoin mining segment, within 2 weeks, the difficulty would get adjusted. So it was back to like you have no advantage, essentially. So that all balances out. And that's why it's extremely difficult to get ahead in the Bitcoin mining game right there. All right, extremely difficult. So what is that all? How does this relate back? Well, that was when we did the last halving. That's when they cut the reward, that subsidy for mining a block of Bitcoin got cut in half right back here. It now got twice as expensive to, if looking at it from a mining company, it got twice as expensive to mine a block of Bitcoin. And the subsidy fees got cut in half. Now the transactions, as you can see, were running pretty low right now. So it's not very lucrative to be mining Bitcoin. Bitcoin's not very exciting. There's not a lot going on right now. This happens every halving cycle. Every halving cycle, it gets more expensive, and it typically takes about 220 days post-halving for the excitement to kick in. Right here. That's right around U.S. Thanksgiving. Now, we're likely to make a bottom somewhere over here. Maybe that was it. Maybe we do another one. Maybe we get a little lower right in here, at 38,000. 38, 39, right in here. And then maybe that happens now. Maybe it happens this week. Maybe it happens next week. Then we start the excitement. Then we break out above resistance. And we actually get to the point where we're going to start cruising on up here. So this is kind of the pattern I've been watching. We usually make the bottom in this 220 days, and we start breaking out to higher highs toward the end of the 220 days. All right. You may be like, well, how do you even know this stuff? I've been messing around with Bitcoin since 2013. So seeing a few things. Right back here. The heart of COVID. Right around May, we had a halving event. I don't remember the exact day. It was kind of a blur. I should probably go look it up. Let's just throw it in there. Right around in May, we had a halving event. You pull this over here. You're like, well, that doesn't look particularly like there was a big pullback like we're having right now. Well, Bitcoin didn't make an all-time high right before that event. The all-time high was on the prior event. Right there. Got to pull this up, make it a little more visual here. So what we had, roughly, I don't think I have my event in the right spot. So roughly when we get to 220 days, we were breaking out. We already had the run going. It was right at the beginning of May, I think it was. So right there, 220 days, we were on the way. We were breaking out new highs. 220 days is the average between all these. So there was the big dip. Like we rallied up, made the dip right toward the end, and then we went breaking out. So this is the dip we could be working on right now. Like this pattern shows up all the prior cycles. Now, the difference here between what we had here and what we have going on this cycle is that we had spot ETFs get introduced before the halving event. This created extra excitement here that we popped into. Extra excitement. And we went to a new all-time high. Now, if that hadn't have occurred, if we hadn't got those spot ETFs, we probably would have stalled out in here, gotten the correction, and then be set for a rip. So we're having to work out that extra excitement right now. On May 11th, yeah, thank you, Sledge. We're having to work this out right here. Put it on the 11th. Come on. I'm going to have to zoom it up. Right there. Pull this over just a hair. Right there, as you can see, we had a dip right at the 220 days, and then we started the major rip. Major. This hasn't occurred yet in this cycle. You may be like, well, how do you know it occurred prior cycles? Look right back here. It's the same exact. When I talk about the bubble pattern, this is like the bubble pattern. Everybody gets excited. We had a halving event back here in 2016. It took about that time, same amount of time to get excited, and then we went on a giant rip. Same. We had the same similar thing right back here. Look. 2012, halving event. Got a little excited, then really excited. And we went into crypto winter and retraced it back out. Then we had the next one. Got super excited. Then we retraced it back out. Then we had the next one. Oh, there's the high I'm looking for. Right there. That's the 220 day. Right over there. There it is. That's how it lines up. And right at 220 days before we broke out. Just didn't have my chart pulled back enough. It's like, why isn't this working? Then we go on the rip. There's the prior high. Come on over. Make a new big move up. Right there. Secondary high. We kind of we got a big retrace and we went up and made that final high in 2021. Then we went through another crypto winter. And everybody was like, oh, bummed out. The wild thing, we tend to pull back about 70 to 80% every time after we do this. Right around 70 to 80%. It's a 786 pullback, basically. So this next run, another interesting thing is the low that occurs after the big spike. We tend to 10 to 20 exit on the next run, 10x to 20x higher. That puts the target 10 to 20x higher than this low here, right around 15,000. That makes it 150 to 300,000 is the target for the next explosion higher, or next expansion higher, however you want to say it. Once we work through this 220 days, we might get a pop right up here. So I have an alert, and possibly up to 300,000, which I don't have an alert on. So 150 to 300,000. That's the target zone for the next run, the next expansion, just based on the history of this thing. Right up there, that's the target. It's a big fat one. It looks like it's a long way away. All right. That'll drag most of the rest of crypto with it. As we can see, the total chart here looks a lot like the Bitcoin chart. Now, it has a little bit of suppression in here because the number 2 crypto is on a little bit different path. Ethereum here. Look how not similar to that total chart and to the Bitcoin chart. Both of those hanging out near the roadmap line. But Ethereum, the number 2 crypto, representing 15% of the entire crypto value. 15% of the entire value of crypto is sitting down here, consolidating, and looks like it needs and push lower. And here's the main support and main resistance. We're sitting right on the support level. If we break down below that, it's likely we get a lower low. And this has the look, like we just did 1, 2, 3, 4, and we're going to get this fifth wave move to flush this out. And we've been correcting since way back here in March in a bigger way. And even with the spot ETFs that got approved on this, still not awesome. And this one actually bottomed way before Bitcoin back in June of 22, while Bitcoin bottomed out here in November. So this one's actually running ahead, and we may see this flush out here, right down here. This may have already completed its move up, getting the bigger retrace, and then going. And Bitcoin still be just working on the first move. And we bottom out right here in November. Back in June, we were still much higher, up here around 20,000. So we got that last $5,000 flush out into November, while Ethereum over here was the opposite. We made the big low in June and then made a higher low here in November. So they're on two different paths right now. They're on a similar path, but two different. They're operating on two different kind of pathways to higher prices. This one would look best if we would just go ahead and flush this down. Lower low can mean anything below this low we made right back here early August. When the whole market was flushing out, crypto flushed with it. Anything we can do, just nominal lower low. Anything just a tick below that low finishes this pattern up, and we can go forward. Now, the beautiful thing here, this high, looks like a first move down, a retrace, and the second move down. This sets this up for much, much higher prices. So just go with a nominal lower low, not all the way down at the target. We're looking at 4,300, 4,600, 5,300, and possibly even some crazier numbers, like up here around 7,000. Put it on a log mode and it really gets crazy. We're talking 10 to 12,000, roughly. But I don't know that the log mode makes sense. So now, total 2 here takes out Bitcoin. It's the total market cap of crypto, excluding Bitcoin. And it looks more similar to Ethereum, where we need that just one more lower flush. Now, if we take out Bitcoin and Ethereum, take out 70% of the crypto, this is what we have left right here. That's still quite the downtrend. So there's not really anything bucking the downtrend, even when you take out the two big ones. Now, fascinating to me, you look at total, and you look at total 3, they look very similar. Because Ethereum is running a different path. It makes total 2 look a little different. Now, there's one more ticker I like to look at called Others that takes out the top 10. We'll come back over here, look at the top 10. What we're doing, we're taking out all of these coins right here. Shrink it down just a little bit, see if I can fit it on the screen. We're taking out the top 10, which is currently those coins right there. Bitcoin, Ethereum, Tether, Binance Token, Solana, USDC, XRP, Dogecoin, TRX, and TON. Taking out those top 10. Maybe like, well, what about the other ones? Cardano and Avalanche. And we're not in the top 10, so they're all included. This chart starts to look a bit more similar to total 2. It's interesting. The rest of crypto, a lot of it's built on what they call ERC tokens, which is Ethereum, basically Ethereum-based tokens. A lot of the rest of crypto, Ethereum made creating extra cryptos that ride along with Ethereum very, very easy with the way it's created. They have like what's called smart contracts. You hear that. So ERC tokens, ERC20 tokens are very common. And that's why the others, excluding the top 10, looks very similar to the Ethereum chart here. Not perfectly, but very similar. There's a lot of Ethereum-based stuff in this chart right here. Kind of in this channel. If you've been like, oh, crypto's been sucking, like, look at this. We're in this correction right here. Found support at the 618 so far. Now, the big question though, is it the 618 that's non-log, or is it the 618 that's log scale, and we need one more flush right down here? So we have the log mode, 618. We need that before we can go higher. It may be what the market needs. That can project it up here on the next run. Get a move like that. You see the same thing happening over here. We got a giant move up past the 272. We got the big move up over here past the 272. We could be talking about $5 trillion in other cryptos, not counting Bitcoin and Ethereum and the other top 10. That would make the total market cap an absolute ridiculous number. Absolute ridiculous number. This chart doesn't look nearly the same, but we got a little bit deeper flush there. We could be looking at somewhere up here, $27 trillion. You'd be like, well, how in the world would that absorb $27 trillion? That's why I'm not so sure we're going to do that, because gold, the market cap of gold, all gold is just $17 trillion. So it'd have to absorb all the gold market to do that, plus the value of Apple to get to 20 trillion, plus the value of Nvidia, plus the value of Microsoft to get to that 27 trillion. Maybe even some of Google. So we'd have to add all the value of that. That's why I'm a little skeptical we're going to go that high. That's a lot of value, a lot of money that would have to flow in. Right now we're just sitting at 1.1 trillion for Bitcoin and 2 trillion for all of crypto. All right. That's just law of big numbers. When the numbers start getting around in the trillions, it's more difficult to push these higher. All right. The entirety of the fiat currency system, maybe like a global fiat, you know, we can just print money. Right now, the totality of the global fiat system is only like $250 to $300 trillion. We don't have an exact figure on it because all the conversions and this and that and the, you know, what's really valuable, what's not. There's some debate on it. So we're talking about this. If this went up to $27 trillion, that's roughly 10% of the entirety of the fiat money system. If this went that high, it would represent 10%. Now, gold, historically, like 4,000, 5,000 years, whatever we've been messing with gold as a human race, historically used to represent 5% of global fiat. If you go look at back the Romans, the Greeks, all those, typically gold represented 5%. Right now, it's like 0.1%. 0.5%, if I do my math, 0.5 at the 17 trillion. But I have to climb quite a bit. It's interesting, isn't it, when you think about how this all ties together? I look at crypto, particularly Bitcoin. This is kind of like my underlying. It's not as a safeguard for the market. It's not as a hedge for the market. It's not as a store of value. It's as a hedge for the fiat system collapsing. Think about it. If all major currencies all of a sudden went into a spiral, an inflation spiral, and this could happen. Like, it's kind of like out there a little bit, but Bitcoin may be a giant what they call credit default swap. Everything is running on debt right now. All the major currencies are kind of in debt spirals. There's no real currency that's not adding tons of debt right now. So if they were all to go into some sort of inflation, mega inflation, hyperinflation, the dollar terms value of crypto could actually do that. All of a sudden, the money supply 10x's. We could do that pretty easily. So I look at Bitcoin in particular as a credit default swap for fiat going into some sort of mega hyperinflation. A lot of people don't look at it that way. A lot of people don't talk about it that way. Not store of value, but more of a hedge against hyperinflation. You can look at the history of Bitcoin, buying all sorts of things, buying houses, buying McDonald's burgers, buying cars, Bitcoin and gold. You know, funny enough, if you look at the history of gold, it's taken about 300 ounces of gold or 200 ounces of gold, somewhere around there, to buy the average house for almost gold's entire history, forever. And this right here, kind of getting to be the same thing, except it takes less and less Bitcoin to buy the things because it's coming up so fast. Eventually it'll probably reach a parity point like gold and just kind of ride along with inflation. I think we probably have 2 more halving cycles before it really settles down. So the next halving cycle out in 2028, and maybe the 2030s before we get there, and Bitcoin may settle into the $1 million area. $1 million of Bitcoin before we see this kind of settle down and just act as an, right along with inflation like gold does. Any questions? It's kind of different than just diving through a bunch of cryptos. But right now, crypto's in a correction. Like, this is some sort of corrective action right here. And as I outlined, there's the levels I'm watching. This may resolve in the next couple weeks. That's certainly what it's looking like. Could it resolve quicker than that? It could resolve tomorrow. It could be all on the path by tomorrow. Now, some other interesting cryptos that are down in here, not exactly following those paths. Solana, that doesn't really look quite the same. We do have some declining highs. We're kind of getting that last little dip, but it's not exactly the same. XRP, well, that chart doesn't look anything the same. But it's not exactly a bullish chart either. A lot of set of lower highs. Concerned about this one, right? Back here in March, when Bitcoin and Ethereum making highs, this one making a lower high. That's the 3rd lower high in a row. This is the 4th lower high in a row. Kind of the 5th right now. Gives me caution on XRP. Even though it's not the same chart, not the same pattern, caution. Then there's other ones like this one, Litecoin. They're outperforming to the downside. Look at this move down. That looks like it may go lower low. So be very careful. We may see some shakeout. I'm permacautious, right? Permacautious. May see some shakeout in the crypto space. Now, another one that's particularly interesting, and you can't really just go buy this very many places. Not XLM. Clicked on the wrong one. XMR. Look at this chart. Entirely different. This is the only private crypto. that I know of. There's probably some more, but this is the only major private crypto. You can't just go buy this on Coinbase because the transaction and the holdings are anonymous, truly anonymous. You know, they can actually, Bitcoin's actually more trackable than US dollars. Once you put together somebody's address for Bitcoin, you know how much they got, you know everybody they've ever transacted with, you know every transaction they've ever transacted. It's a public ledger of every transaction. Right? Incredibly difficult to hide who you are and who you've transacted with in Bitcoin. It's very similar with Ethereum, very public. This one, on the other hand, XMR, Monero, if people on the dark web were smart, they'd be requesting XMR because you can't go get tracked. This is a very anonymous crypto. Your transactions are anonymous. How much you hold is anonymous. Everything's encrypted and hidden. And as you can see, this is a whole different path. This is not even somewhat similar to Bitcoin and Ethereum. It has a very defined support and resistance going right now. This high, this low, which is this low. If we break above this 618 right up here, it looks like we plummeted into this. We've just been consolidating, waiting for something. Maybe the next run here. Upside target 600, 800, possibly even up here to 1500. Next extension higher if it can ride along with crypto. And if it goes to the 272 extension, right up there, 4,000 possible. So right now it's hanging out about 167. It's kind of been, this has been storing value pretty well. Hadn't really been losing value, hadn't been gaining value, just kind of been storing value really well. And this is a, like I said, anonymous crypto. So you're going to have to go what they call off exchange to go acquire some. That Ethereum has the opportunity to go down, and if it breaks support on the downside, Ethereum could go on a much bigger, deeper retrace. And that's the caution there, Gaten, that even though it could be ahead, Crow and Rose, they're both following Ethereum right now. I'm picking very specific cryptos because I go through the charts every Sunday. So I spent like 2 hours of my day yesterday going through all the crypto charts, created a video, and put it out to members inside Crypto Power Plays. And these are the cryptos that kind of stood out. Something else different going on. Most of the rest of them, most of everything else looks a lot like Ethereum. Almost every other chart. Now there's some that look really, really bad. Really bad. Trying to think of which one. I think it's THOL. It's still on here. Been taking some of these off the list. Injective. Correction. Now COSPA, also interesting. No, Ethereum changed it up. I think they would be in a whole different place if they didn't give up on miners. Right? They decided that miners were causing too much transaction fees, and they wanted to get away from it, and they moved from proof of work to what they call proof of stake. So now you authenticate Ethereum transactions by holding Ethereum. There's very little in life that we ever get by not working for it. So moving from proof of work, I think, was a poor decision. The new one taking their place, as far as proof of work goes, is COSPA. The mining industry, crypto mining industry around COSPA is very, very active, and has caused this chart to be very, very positive trend. This is where miners are playing, small miners, not Bitcoin miners. A lot of your smaller miners are hanging out here, and you can see it's starting to arc off a little bit, starting to gain some stability. The down pressure currently in crypto causing it to ease up just a little bit here. We could correct a little bit. It's been a very positive. You know, usually we see charts going exponential. Usually they start out slow and then they go like this. This one started out kind of fast and is exponentially kind of stabilizing. So you may see this do that in the future, just kind of drift higher and be very stable. I mine Cospa. I've actually got application specific integrated circuits, a little black box that mines Cospa. It's very popular and it pays out pretty darn well for how much electricity it uses. It's kind of like what Ethereum used to do. All right. I can touch on Crow and Rose. Crow, when you look at it, we haven't even gotten anywhere near all-time highs. That move up looks like 3 up. Could make a 4th down. Very clear. That move up. That retrace. That move up. 3 up. Could make a 4th lower. I do all day about 65,000 of these and have them plunked down and authenticating transactions. They are a proof of stake type situation like Ethereum. I get paid like 9%. Get paid in Crow. Now this low, this high, we're at a 618 retrace. If we can hold this, the potential here, we can right up here, possibly 26, possibly 37, possibly 60. But none of those are new all-time highs. It would have to get up to the 272, $1.41. I say it's very similar to Ethereum because when you just zoom in and look at the recent price action, downtrend, retrace to the roadmap line, pushing down. Holding the 618 so far, but if we push lower, right down in here, 6 cents. And then Rose, instead of going digging for it, I'll just pull it up here. This is looking somewhat more bearish, very similar to the Ethereum chart. May make a lower low. Now some other ones that don't quite look like these other cryptos. A new coin, Pepe, PP. Hear me joke about it. 1, 2, 3, 4, 5 up. Working on a high level retrace. May dip right down here to this level. This looks like it's set to do an expansion. This crypto has not been around very long. If we retrace to that same vicinity right there, could set this up for a move up into this area right here on the next expansion of crypto. Another one, this is a Telegram coin. Doesn't even have enough candles. Right here, working on a retrace. Support right down in here. Looks very similar to the initial move on Pepe right here. Got this excitement and a retrace, and then went on a giant expansion. Looks very similar to that initial excitement, retrace. And could go on an expansion. Maybe up to $1. This coin is associated with Telegram. Not exactly sure on all the details here. There you go. Another one that has an interesting pattern. I feel like it's interesting. Proportionally. This low, this high. We're holding really well. We can break through the roadmap line. This one may do some outperformance on the next move. This one's a little bit of an AI-based coin. Could see a nice move up in this area right here. Currently hanging out at 7 and may go up here. Now, crypto, you might as well take your money out back, throw it in your fire pit, and light it on fire if you're going to get involved. If you don't feel like that way, this is excluding Bitcoin, all right? Like I'm talking about general crypto. outside of the top 10. So once we move down away from the top 10, really it's outside the top 100. Top 100, pretty stable. Some of them drop out, some of them hop in. The further down the list you get, the less awesome they are. This is CoinMarketCap, if you're wondering. In general, once you get out of the top 10, if you're investing money into crypto, if you're putting money into that crypto, and that money, you couldn't take it out back, throw it in a fire pit, light it on fire, and not still be okay, you should not put any money into crypto. It's trying to be completely honest. No, Bob, it was not. To answer your question. And that's a members only topic. So I was not able to pay it off, and maybe sometime this week or next. We'll see. It's going to be a whole process. I'm going to use the dealer payoff process that the finance company has in place. Went and dug in their website and found they have a list of instructions for dealers to pay off cars, and that's what I'm going to use. Anyway, all right. I've talked a long time, almost an hour, and there's not a ton of people here, so I do appreciate everybody being here. Give me a thumbs up, give me a like if you appreciated what we went through today. Maybe you heard something interesting. I know crypto's kind of like, that's not awesome, JT. That's the way crypto is right now. It's going to bum everybody out. I'm not sure we're at peak bummed outness right now. I think there's too much excitement still hanging out. I think we may do one more flush, really bum people out, and then we start the rally. That may be what we've got happening right now. We always get this peak bummed outness. I thought halving was bullish. You get all these crypto bros hyping it on YouTube, TikTok, all those things, hyping it up, go through the halving, get super bummed out. Everybody's like, oh, it's not doing anything, it's not going. And then all of a sudden, we get the big expansion. Every single time. Every single time. So I'm not sure we're at peak bummed outness yet, as I call it. So I'm going to go do some other things today. Have a great day out there. I'll be kind of around Discord, but probably not for the most part. If you got questions, you can ask me. Thanks for coming. You can be a channel member. I do appreciate it. Thank you all for being the channel members, the green names. I do appreciate it very, very much. Have a great day, everybody. I'll see you again soon.